making money is no good if you don't, you have it for 1 month of the year, but it's not there for the rest of the 9. It's about rest of the 11 might be good. I'll just have some more coffee.
It feels like 9. It's okay.
It's okay. It feels like we do it all in 10 months. Making sure that we are looking after our businesses and making our business profitable. Yes. So Laura is joining us. Laura, we have known each other for years now.
We have.
Laura's joining us from Profit First Australia. We've been online. We met for the first time in May this year face to face. It was like meeting an old friend. And Laura's here to talk to us today about Profit First. And Laura and her partner were so lovely because they kept giving me real coffee, which was really, really important. They were equally as coffee obsessed as I was on the day. So popping in to say hi. We've got just a few more people. I'm just going to let Laura introduce ourselves and then I'll catch up with the watch party details and the live stream details. So
awesome.
Welcome.
Thank you. I'm very excited to be here. And thank you everyone for being patient with the change. I'm very excited to be here today. And I will be talking about Profit First, but more importantly, how to run a profitable and sustainable business and what it looks like. So like, what if rather than you serving your business served you? So that's a question that I have. Like who here live and those that watch the replay actually feel as if their business is serving them. That's the biggest thing that I want you to sort of consider when I talk about, Profit First. But
let's just do that for a minute, guys. Pop it in the chat. Yeah. Do you think your business is actually serving you, or do you think your business is working you?
Yeah, it's interesting because it's such a mindset shift that needs to be made first of all, and then the practicalities come with that as well.
Joshua's just said to us, still making just enough profit to live off, would love any tips that will help. Then stay tuned,
Awesome.
Joshua, because this is one that you do want to watch today.
Absolutely. What I will do is I'm going to share my screen because the second slide is just a little bit about me in, I guess, a more interesting way than my standard bio. So 1 second, I will do that. Okay. Can you see my screen all right?
You've started. Yeah, now we got you.
Awesome. Okay, so obviously my hair looks a bit different in this. I've grown it since then. But I am going to change to this one. So not everyone here probably knows who I am. I am a mother of a 5-year-old son. I'm also a BAS agent, have an accounting degree. I love educating people. As you can see, I love my coffee, as Linda even mentioned before. I
even brought coffee with me today for you.
I had mine before I got started because I'm like, I can't really be sipping on my coffee during the Profit First, discussion. And I love traveling. So that's who I am. I also run Profit First Australia. And my role is to train accountants, bookkeepers and coaches in the Profit First method so that they can help business owners be profitable and sustainable from day one or even years down the track, no matter how much debt that you have. Beautiful. And I'm here to speak about Profit First, which I'm absolutely excited about. Okay, so who of you here, if you could put in the chat, actually have heard of Profit First? And those that haven't, what do you think Profit First means?
We're getting lots of people telling us that they love their coffee equally as much as we do. This is awesome.
You are my people.
Yes.
I love it.
They are my people too. So pop into the chat. How have you gone with your business? Have you heard, what was that one, Laura? Profit First?
Have you heard of Profit First?
Yep. Beautiful. Sorry, guys.
If you haven't, what do you think Profit First means?
Yeah.
The reason I ask that is it's really interesting to kind of know from people what they think Profit First means. And there's a lot of negative connotation around profit and, earning lots of money and that sort of stuff.
We've got one coming in via the chat box. Laura, Eva has not heard of Profit First.
Okay.
I wonder what he thinks it is.
Yeah.
Yeah.
Please tell me.
Before we get back, there's a couple of comments on the live stream of people wanting to message them, Laura. So
okay.
I'll leave them to you when you get back.
Sure.
You put profit in your business first.
Yeah, absolutely. So Profit First, for those of you that don't know, is a book that's written by Mike Michalowicz, and Mike writes lots of different business books from, niching to running your business like clockwork so it can run without you. And of course, Profit First, which is a money-based on human behavior. So what we're used to hearing about is our accountant going at the end of the year, you know, your income less your expenses equals your profit.
Yep.
And, you know, whether, or it may be a loss even, but you then look at your bank account and you're like, well, what does that actually mean? So
Yes.
this is what Profit First is. It's about behavior, not logic. So instead of that accounting principle of sales minus expenses gives you profit left over, instead we're flipping that around to be sales, taking your profit first, and whatever's left is then spent on expenses. Just this one little shift, and this is a very basic starting point of Profit First, makes a huge difference to your business. Does anyone know why that might be?
Just giving our live stream guys just a couple of seconds to catch up with us,
Sure.
guys. But look, Laura, I've seen you change people's businesses and lives over the years of just watching from the afar with just this simple little formula about profit first and actually putting away money in your business for profit. Clive and I were actually talking about this the other day. This was our lovely, you know, walking around the streets of Bendigo conversation about how systems and automation are coming into place. And I thought you'd like this one. Why I'm giving our people to a chance to pop up and see what they think about that little profile there was things automatically being taken with the way technology is going. You know, you make a sale, the tax is automatically taken out of it. All of that stuff is automatically deducted, and profit should be just as equally considered amongst those areas.
Absolutely. And that's the thing, is that often profit is an afterthought. So if you even look at the simple formula that is crossed out on the screen, basically what you're saying is, let's bring in all the sales, pay for all the expenses, and then profit's kind of this afterthought that's left over. And yes, while we want to be profitable, it's not something that we're striving for. It's not in the forefront. It's, I guess, what you're left with, which if you just swap that around and kind of say, okay, well, I'm going to bring in my sales. Out of my sales, I'm going to put a portion of my profit aside, and then what's left over is for my expenses. It makes a huge difference just if you start that. And for those of you that feel like there is no way you could do that because everything feels so hard right now, I challenge you to put 1% of all of your sales into a separate bank account called profit, and see, one, whether you feel it, and two, what a difference it makes.
Challenge one of today. There you go, guys. Okay, beautiful. Instead of watching your profit, you watch your expenses, is what Joshua's just commented. And Uva said it's the same thing as saving. Thomas says, how I done when I get paid for my clients, I've been able to put money towards my business and put it towards business cards. So Thomas has been reinvesting into his business, which is a very common thing.
Yes,
it's a very common thing in the world of business.
Absolutely. And so we're going to hold that thought for a second, because we are definitely going to talk about the reinvestment and how we tend to, whatever's left over, put back into our business, no matter how long you've been in business for, and whether or not it's actually serving you. But before we get into that, I want to talk about the behavioral side.
Yes.
Of how we are as humans and how it actually impacts our profitability and sustainability. So a lot of people would have heard of Parkinson's law, but in relation to time. So whatever time you have available is however long it's going to take. So for example, if you have a task and you only give yourself an hour, most of the time you will get that done in an hour. If you have that same task and you give yourself 3 hours to get it done, that's how long it's going to take you. The same thing applies to money. If you have a bank account with $1,000 in it, you then spend that $1,000 in that bank account. If you only have a bank account with $100, you make do with only $100. And so that's how, from a behavioral point of view, Parkinson's law is working with us as humans when it comes to our money. And it's very much, you know, in relation to, in particular, the one bucket or the bank account, or, you know, I love food, so I've got a food analogy here. The buffet versus the small plate. So if we look at the buffet, you have all of this available to you and you generally overeat. It's the same thing with your money. If you have everything in one bank account, then it's almost like a false economy within your business. You're like, well, I've got this amount of money to spend, it's mine. When in actual fact, if you separate it out into smaller plates or separate accounts, it will actually show you the reality. So what does that actually mean? Profit First is a cash flow methodology. It's not a software, it's not a system, it is bank account. So it's envelope systems. A lot of you probably remember your grandma or even your parents or whatever putting money aside in an envelope or little cans that were dedicated to, I don't know, the shopping and that sort of thing, and separated out, and that's all they spent from. It's a similar concept here, but with bank accounts. And so instead of having the one bank account, which most people have, that it's actually creating multiple bank accounts. And I'm not saying 20, so don't go and go, oh my gosh, you're creating more work for me. I'm not. But it is like, and the thing is, you can start with 1 or 2 bank accounts versus 5, 6, 10, whatever it is. And depending on how it makes sense to you in your business is how many bank accounts you're going to have. The biggest thing though is that you need to remove temptation. What I see time and time again is business owners working from one business account and going, okay, I've got $10,000 this month. And that $10,000, oh, I can go and buy that course. I can do this thing. I can pay for those expenses. I've got the bills. My pay may be an afterthought, or, you know, which is common as well. And then come tax time, BAS time, or there's an unexpected bill. It's like, oh, I don't have any money, because again, you've created that false economy. And because there is this behavioral system going on in the background when we think we've got more money than what we actually have, you're tempted to use it. And so if we have separate bank accounts, what it does is removes temptation and gives your money a purpose.
Yeah.
That's the biggest thing. Who here actually has more than one bank account? And if you do, like, what are the bank accounts that you have set up, and does it work for you?
Absolutely.
Also, my other question, because I like to ask all the questions.
And you can ask them back at Laura too, guys, but yes.
Absolutely. Is, I've just totally lost it. My other question was going to be, how many of you have debt? How many of you have, you know, bank accounts that you then move money back towards that one main bank account and spend it all and keep going in this cycle?
Yeah, Thomas has different ones. He said, yeah, rather than going and buying cars, forget it and have purpose. That's a good point. Have you seen the Spriggy app, the kids' Spriggy app?
Yes.
Because, yeah, isn't it? Charlotte's learning that at the moment with her goals. I'm like, it's such a similar, not a similar concept, and we've gone through this before, but I was like, oh man, it's so, and this is what we're teaching her at the moment. So Josh has got 3: business, personal, and tax.
Mm-hmm.
So, and Thomas has got a business account, and he's building an account for his daughter as well.
Lovely.
Just trying to keep track of the comments. Beautiful. We got any here. So I've got lots of stuff going. And apologies, guys, I actually have 3 screens going this morning because apparently 2 multitasking wasn't enough. I thought I'd do 3. And soon a credit card is Joshua's looking at as well.
Okay. So credit cards definitely have their place.
Yep.
But I think if you can run your business without one, then you're in a way better position, because the amount of business owners that only use a credit card for emergency, and when we look at what these emergencies are they really emergencies?
Dawn has a couple of accounts, business and 0 in debts. So there we go.
Okay, awesome. It's great that you're using multiple accounts. I am going to go into now, like, what the different accounts are and how they can be utilized. Obviously, this is a generalization. Each business is different. You can use more or less, but I find that if you have these, you've got all of your bases covered. You've got obviously your income account, which would be your main business account where you receive all of your money.
Yep.
From there, you distribute based on percentages that are run on your business, a certain percentage towards profit first. You do profit first because it's a mindset shift. You're actually saying it's really important that my business earns a profit. Just like when back at the other screen where it had that formula, you'll distribute to profit first. Then you put money aside for tax and GST, because obviously that's not your money. The GST is not our money. And
we don't get to keep that bit.
No. It'd be nice if we could, but no, we don't. So you put that aside, and then, you're looking at, okay, what am I going to pay myself now? What is actually sustainable, which starts another conversation around what you actually need to take home. What is a wage that your business has to have in order for you to take this home and not steal from the business or not, not skimp, I guess, in your personal life, because the amount of times, and look, I've been there myself too, is you're like, well, I'm only going to pay myself this small amount of money. You take that home, it's not enough. And so you're like, okay, well, I'll pay for this through the business and I'll pay for that through the business, which has its place. But majority of the time, a lot of it's not business expenses.
And it gets muddy.
And it does. It really does. And then from that, whatever is left over goes to your expenses account. And the reason why we put this out is that you automatically have different purposes for your money. Yep. You can see, without looking at a profit and loss, without understanding the minute detail of what's going on, you can look at your bank accounts and be like, right, okay, I've got this amount of money in my profit account. I've got this money for my tax and my GST. I can pay myself this amount. And I actually only have this amount to pay on my expenses. And the first thing that you can do is go, am I spending too much in my expenses? The amount of clients and business owners that I've worked with that end up at 50 to 90% of their income on expenses.
Yep.
It's just so common, and it can be changed. Did anyone have any questions about this while I've got it up?
Any questions about the graphic we've got on screen, guys? We've just got a few seconds delay with the live stream version, so we're just giving those guys a few seconds to catch up with us.
So these are actual bank accounts that you set up.
I can imagine.
I have it as a serving tray. Again, I like food.
Look, it all comes down to food and coffee. We have our own businesses. We can do it the way we like. Beautiful. Thomas has a credit card for emergencies. Yeah, that's good. Look, they all have their place.
Absolutely.
Do you know how you
would get rid of it?
I'll have to show you this, Laura. We've just done some reviews with a group called DiviPay here.
Oh, I love DiviPay.
Oh, I love DiviPay. I can take photos of my receipts and go, right, there we go. It's been awesome. So we've been doing some really good work with them. And guys, I'll pop the link into the replay for this one. DiviPay allows you to just take your money and have it as a credit card, but it's on the phone. It's on Google Play. Yep. It forces you to take a snapshot. So my accounts team now like me a lot more. Because they have the receipts when they need to match everything up.
And it takes from what money you actually have, which is awesome.
Exactly. So there will be a replay, Thomas, of this, so you will get to rewatch it if you do need to. We'll have that up on the BBB website later on today. So there'll be stuff over the next little while that you do get to see. So you get things in there, and we'll pop links and that sort of stuff in as well to help you today with stuff Laura and I've mentioned throughout the webinar. I think we can keep going, Laura.
Awesome. Okay, so they're the bank accounts that I'd recommend setting up. If you find it's all a bit too much right now to do it all, I would say set up a profit account and a GST tax account as first priority. One, you want to start that habit, creating that habit of putting, even if it's 1% aside from your income to profit. I'll tell you later what you do with that profit account. But and the other one is your GST and tax, because you don't want to get in the cycle of ATO payment plans or not having enough money to pay the compliance side of your business, because it's stressful.
Yeah, so absolutely.
If you're going to do anything, start there. You can then roll out the other accounts as you move forward. One of the things that I said was that you distribute percentages. Yep. And so here's just a quick snapshot, and this is a very, very generalized way of looking at it. The tax percentages will vary depending on what business structure you have and, you know, whether or not you've got a profit or a loss in your business. So take this as a starting point, but it will give you an idea of what I'm talking about. So what you can see here is there's real revenue. Real revenue means that whatever income comes in, you take away the GST, because that's actually not yours, and you take away anything that's a materials and sub. So meaning, like if you have a job expense that is specific to an outcome, not just a cost of goods, but it's a big portion of your income. You have to pay for something, whether it's a contractor to do a particular job or if it's a product material, that comes off first. Then what you're left with is actually the real revenue. Yep. And that's another sort of mistake that I see people make, is they have this income amount come in and go, oh, great. Okay, now that's real revenue. Let's play with it. When in actual fact, you have to take this off the top.
And guys, we're laughing and smiling, but we've been doing this for years.
Yes.
You know, we've been doing this for years. Everyone, please don't feel bad. You go through, if you're doing that, we've all done it.
I've been there. I've got my hand up.
Yeah, exactly. We've all done it in our time going, woohoo, I got $1,000 check. That's $1,000 of money to me. We forgot the tax. We forgot the, the tools and the operation stuff that we need to look at. So please, I don't want anyone feeling bad going, oh my gosh, I'm doing this and, my business is dead. No, your business isn't dead.
No.
This is how we help you get out of it. This is strategies to help you look at building your business and growing your business from there.
Absolutely. And even if you feel like it is literally day to day with your money, this can work to turn it around for you. It's not going to happen. It's not a silver bullet. It's not going to happen tomorrow, but it's definitely something that you can put in place right now, no matter how bad it is, and turn it around.
And get some strategy.
Absolutely. So as you can see here in the real revenue range, let's just start with A, and we'll just go through column A as an example. You've got your real revenue. So that's after GST and that's after your materials and subs. So that might be $1,000. 5% of that, and these are percentages that you're going to work towards. Some of them may not be achievable right now, but let's just say they are. You've got 5% of that $1,000 is going to profit. 50% is going to yourself, because we never pay ourselves properly a lot of the time.
No.
And also it allows you to see what you need to bring in if you are paying yourself 50% of what your real revenue is. 15% towards tax, and then 30% towards expenses. So as you can see here, you're pretty much capped at 30% of your real revenue to actually spend on operating expenses, whether that be, subscriptions on particular systems that you're using, paying for that shiny object or that marketing budget, and all of these are valid. But it's a matter of understanding, is this something that I can afford right now, or do I need to do X, Y, Z before I can then afford this? And so you would establish, a time when you do the distributions, and these would be the percentages that you'd work towards. Just doing this alone is going to make a really big difference to your business. And as you can see, I've done a different visuals, because depending on how you learn.
Sometimes we like to see the numbers on the system.
That's it. Yeah. So 100% of your real revenue, 5% profit, 15% tax, 50% to owner's pay, and 30% to expenses. This will vary depending on your business.
Yep.
And the order is everything as well. So as I said, profit first, the income comes in, goes to profit. Put your tax aside, owner's pay, and then expenses.
Yeah.
So we'll just walk through that.
Yes.
Okay. For some of you, go ahead.
It's not overcomplicated, guys. This isn't about overcomplicating your account system. It isn't about overcomplicating your business system, but it's about knowing where your money goes. And I think that's something I find talking to a lot of business owners, that they just don't know where it's going, but they get the tax bill or they get whatever bill that comes through.
Absolutely.
Here we go. We've got Joshua said, should you work out the percentage at the end of each week, or every invoice, or every month? When should you be working these percent? That's a really good question.
That's a great question. And it's going to depend on your business and where it is right now. So what the book recommends is the 15th and 25th of the month. Reason being, it's US based, and that works well for a lot of when their bills come in and fall due. That's not going to work for everyone. Some of my clients need to do it on a weekly basis, every Monday, because at the moment it's really week to week with things, and they need to juggle stuff around to make sure that works. I have other clients that do it monthly. So it's going to depend on what suits your business and how often you need to be touching, your money. But it has to be consistent. So if you're going to be doing it weekly, do it the same day each week. If you're going to be doing it monthly, the same date each month. The reason being is not only are you getting into a habit of doing this, that it just becomes, second nature, you can actually see the themes that are happening in your business. When does the majority of your income come in? Where do you feel things are the most difficult? Is there a time where, you could move a particular bill from, let's say, the 15th of the month to the 20th, and that'll make a huge difference to your cash flow. It gives you a lot of great information that you otherwise can't see in one bank account or bucket.
Exactly. At the moment, Joshua's doing it on every invoice, and I think that works well too.
It does work well.
If you've got that discipline.
But what I would challenge you to do is to move that out more, because you will not see how your business is running. And that theme that I spoke about, yes, it works on the invoice, But one, when you get really, really busy, that's going to become quite cumbersome. Yeah. And two, it's not sustainable long term to do it on every single invoice.
Yeah, look, we meet with our accounts division every Monday morning, and there's no excuse to get out of it, although I try.
Absolutely.
I normally send them an email going, and this is my explanation for what I did.
Absolutely.
But, you know, and the reason we do is because even as business owners, as Clive and I with 5 businesses here, we need to be held accountable for what's happening within the money in the business too, and know what's going on. And that's a really big one. Yeah, so it's good.
Key.
Yeah, beautiful. So Josh just said, when I receive a payment for an invoice, I separate each to each account as I get payments on different days and different times. Yep,
that works. There's nothing wrong with that.
Yep.
But it depends on, like, if I asked you a question right now and said, okay, so when do you get the most income in the month? And do you have a particular date in the month where things feel a bit tight? What's your biggest expense? Because the more often you touch it, the easier it feels to manage it, but it's not giving you that higher level information. So, but if you can answer those questions, keep with it. I'm not going to change it on you.
He's a locksmith, so it is one of those very, very varied income strategies.
Yes.
Yep.
Absolutely. But the thing is, if you do it on a consistent basis, it also helps more with the downs. So if you have an inconsistent income, when you get a big month or a big week or whatever it is, that should compensate for the lower end if you get your percentages right. So you shouldn't have to do it every single time you receive income.
Beautiful.
Okay.
And guys, you will, Joshua, you'll get a call if you hang around to the end. There's an opportunity to have a call with Laura here today. So might be good to take that one up with her and have a bit of a chat further down the track.
And that's the thing. All of the percentages that I'm stating in here are a base, like a starting point. It could be very different for your business. And, you know, where you start to where you end up being could be very different as well. So that's why working with a Profit First professional is worthwhile, because they can look at your business specifically. Now, for those of you who here, and you don't have to put your hand up or admit to it, but who here feel like they don't have a really good sort of understanding of their numbers, or who has really messy books. The reason why I ask, and it's not to shame you or any judgment like that, but there's a way that you can reverse engineer your percentages so that even if everything feels really messy, you can establish a good idea as to what percentages you should be working towards. And so as you can see on the screen here, we've got the real revenue. And again, that's less your GST and any materials and subs.
Yep.
Profit, if you're in a really sort of difficult position or in a bit of a pickle, then I would start with only 1%. Your owner's pay, I want you to look at, well, what are your personal expenses? What gap do you need to bridge at home?
Yep.
What are your personal goals too around that? Because what you absolutely need, bare minimum, to where you want to be could be very different, but that will help you establish the minimum percentage that you need to be taking from the real revenue. Tax will be based on real revenue. So if you're running at a loss at the moment, you could actually start at a lower percentage and build that up as you start to see more profit. And I do recommend chatting with an accountant, because every person's business is different, and it's important to know where you stand from a tax perspective. That's just a disclaimer over there. And then your business expenses, actually have a look. What are your fixed business expenses? What are your variable business expenses? Do you have staff and wages that come into this? Have a look at that. Even if you can't run a report to get this information, you can look at, you know, a bank statement and highlight, you know, in green, those that are fixed, you know, in purple, those that are variable, and you can just add that up. It's a really, really good way to get a very clear idea as to what's happening with your expenses. It'll also highlight the incidental spends that you do, or the subscriptions that tend to stay there when you're like, oh, I don't need that anymore. So it's something that should be done. And then from that, based on what your minimum income is, your average income that you earn, what your percentages could be. So that's a great starting point if you just don't know where to start.
Yep, exactly.
As I said, Profit First is very, very, very flexible. So don't feel like you're stuck in this percentage goal that I have in here. Any questions so far?
Laura, can I grab that screen now, the blank one?
Yep.
When we get to put in the replay.
Sure.
So that we can pop that replay or pop a screen like that, a worksheet that people can actually go through.
Absolutely. And I do have, which I'll be sending through after this, an instant assessment that you can do on your business.
Oh, beautiful. Fantastic. Yeah. Great. Sorry, asking questions before she's even got there.
But that's okay.
Did anyone have both of us?
Totally, right? Did anyone have was anything confusing about what I said? Does anyone have any questions about how it might apply to their business?
Feel free to ask.
That I might have missed. Yeah, please ask questions. I don't bite, I promise.
Nope.
Now, we've spoken about profit a lot. And now I want to talk about profit and the profit account and how it's used. So, and this is where we come back to that reinvesting in your business. So for a lot of people, I guess the thing that we're taught is whatever money you have reinvested into your business to grow it, and then ultimately you'll earn more profit and so on and so forth. In reality, this is my experience and it's my personal opinion. It may be, and it's a generalization, but in my experience, I have found that the reinvestment into the business generally does not have the return on investment that we think it will have. So instead, if you can utilize this profit account for different purposes, the first purpose is that it accumulates for a quarter. So you don't touch this account for 3 months. Reason being, even at 1%, you get to see how much money you can actually accumulate based on the income that you have coming in on 1%. And as that percentage increases, then obviously the dollar figure increases. From there, there's 3 different things that you can do with it. The first is you can put, 50% of that away into another account, what I like to call the vault account, which then becomes the rainy day money. This becomes a buffer for your business. So like if the worst is to happen and you can't work for a period of time, but you will have the money to be able to still pay your wage, still be able to pay all of your expenses and keep your business going for 3 to 6 months. That's the aim there. Yep. The other thing is it's a great way to look at and kind of understand what is the buffer that you need in your business?
Exactly.
How much is that? Most people don't know. And the figure is surprisingly big a lot of the time.
Now, once again, we are laughing because we have both been there and we know that you do need a buffer and there are going to be times when stuff happens.
Yeah.
Can you remember, Laura, when I told everyone that the rebuild on family capers cost us $30,000 and then we still had to fix it?
Yeah.
Yeah.
Yeah, that's
I think the buffer was for lots of wine.
Oh, for sure. Absolutely.
And coffee. But it was but that was a reinvestment that we did. And I just don't want business owners to feel in any way, shape or form that it works for everyone all of the time. And just because, things are working now didn't mean that it didn't and we don't understand it. It doesn't mean that we don't. And we actually, this is a really good point. We both got on the phone this morning and I was on the phone to someone and Laura said, sounds like my morning. And we both said the same thing. It just sounds like my morning. Just because we're here happy and smiling now doesn't mean we don't have bad days alongside you guys. So please.
Absolutely.
But I do like fun money. Fun money.
Absolutely. And that's the other thing. Out of your profit account on a quarterly basis, whatever's sitting there, 50% of that can go to a buffer. The other 50% should actually go to you personally. So even if you are a sole trader, it's almost like you're doing a profit distribution to yourself. So when I say profit distribution, I don't want you to think about it in accounting terms. I want you to think about it in terms of you're rewarding yourself for the hard work that you're putting into the business.
We've got to
do that enough.
Yes.
We put that, I guess, distribution back into the business. Yes, it is worthwhile sometimes to reinvest if you have a particular plan in place and you've done it and here's my, accounting
hat.
You really have a solid plan and there's a reason for doing it. I'm absolutely for reinvestment, but majority of the time we need to do this first, putting the money aside and actually taking a portion of our profit personally. And it's not to go back in your business. It's not allowed under the profit first principles because we have our goals personally too. How are you going to achieve them if your business isn't serving you? This is one of the ways that your business can serve you.
And I think, guys, what you got to think about this money, about reinvesting into the business, that's great. Mm-hmm. But you didn't get into a business not to have a life.
Yeah.
not to choose to take your family on holidays and that sort of stuff. And it's not a case of making just enough money to, you know, get an extra holiday or getting something like that. It's about making enough money so the business is sustainable and you can take that holiday and you've got the buffer money to pay other people while you're there. And that's really, really important when we look at our business. And, you know, you are able to walk away, and like Laura and I both coming up to school holidays and we're going, yeah, reduced hours.
Yep, absolutely.
We've got to go explore, do things, you know, poke those little beings that we made and see what they're like. But that's what we got in a business for.
And it centers you back into, well, what is your purpose for your business? What was it there? How is it serving you rather than you serving it? Because a lot of the time as business owners, we serve our business versus the other way around. And that totally loops back to my initial question at the beginning. But it really is something to consider. The other thing that I want to talk about when it comes to the profit account is probably one of the biggest things that I see is debt in some form or another. Whether it's business debt, personal debt, credit card debt, whatever it is, there's usually some debt associated to running a business. And so the profit account is utilized, and, you know, you still put the 50% towards your buffer. The other 50%, if you have debt that should be going to you, up to, you know, 99% of that should go towards busting debt, bringing it down, freezing it, crushing it, and doing the snowball sort of effect. You still, out of that amount, that 50%, that 1% left should come to you. No matter how much debt you have, you should always give yourself some kind of distribution, because again, it's a motivation. It's a way of, you know,
it's that
going yourself.
That we all used to work so hard for in the corporate world.
Correct. Absolutely. And we don't do it in our business.
Yeah.
And so, and when I say the snowball effect on debt, what I mean by that is that you pay off out of your operating expenses the minimum repayments or what your business can afford towards your debt throughout the weeks, months, whatever. And then once per quarter, a lump sum of what is left in that 50% of your profit account, up to 99% of that gets put onto the debt, and generally to the, you know, smallest debt first. Reason being is, again, it's psychological. We get motivated if we see that the debt's going down. Whereas if you start on the biggest one first, you feel like you're forever chipping away and you're getting nowhere. So again, another behavioral sort of way to deal with it. So, and you'll be surprised how quickly you can cut down debt just by utilizing this profit account for that. And as you earn more money, that increases too, which then means you can pay off your debt a lot sooner. You definitely want to change how you're using things that create debt as well, so that you're not in a cycle. But this is definitely something that I want you to implement if you do have debt.
Yep.
Anyone have any questions?
Any questions so far, guys? We've got lots of watchers all over the spot today.
Awesome.
I know, it's awesome. So if you've got any questions, everyone, please ask away.
Okay, the one thing though that I will say about Profit First is you have to stick with it. You absolutely have to stick with it.
I wanted a Band-Aid.
I know, I really wanted the silver bullet too. But,
damn it. Okay.
I actually, funny story, when I first came across Profit First and the fact that there was this thing called Profit First Professionals, I was so skeptical about this working that I did everything I possibly could to break the system. And I couldn't, which is now why I'm an advocate. But it is all about consistency, which I guess is what we hear all the time with everything, whether it's weight loss, earning more money, whatever it is, it's consistency, marketing consistency. It's the same thing here.
I've been known to do the occasional thing too. I don't want it to work, so therefore I will.
Absolutely.
I will try and break it instead. Okay, can't break it. Okay, well now I have to do it.
Exactly. And so the thing is it's that rhythm.
Yeah.
Make sure you're distributing at the same sort of time. Adjust your percentages if you need to, rather than borrow from yourself and never pay yourself back and that sort of thing. There will be times, and I promise you right now, if you've been struggling to make ends meet over a period of time, when you start to implement this, you will come to a crunch point where it feels like you have no way out. This feels awful, but it is an absolute blessing, because things can only go up from here. And if you stick with it, it can turn around. But obviously, make sure you've got accountability and support with that as well.
Yes. Wow. Okay. Definitely stick with it, guys. And it's like everything. It was funny, Laura. I have the business life planner with me, and I was like, it needs to go in the master to-do list.
Yes.
It has to go in the master to-do list. It does. It does. It has to be in the master to-do list. It has to be in those tasks every week that you do. But that master to-do list for your business, and you'll hear me, if you coach with me, you will hear me ram on about that consistently, about your master to-do list. But there is a master to-do list for every week in your business, every month in your business. And it's because these things we can't avoid. It needs to be something that we need to look at constantly when we're running our businesses. Okay, has anyone got any questions for Laura today? We're cruising along quite well here.
It's awesome. The last thing that I will say, because, I can't help myself, is that Profit First is also transferable to your personal life. So one of the biggest things that I talk about with my clients,
I use Profit First in my personal life.
Yeah, is that
I hate numbers.
Absolutely, is that we can get the business in order, but if we don't have our personal finance, or we're not clear on that, then you'll feel like you're hemorrhaging money somewhere else, and you'll feel the pinch elsewhere. So once you've got, Profit First in place in one spot, I definitely look at doing it in the other and getting the same clarity around that, because, just like a business is a part of us, our personal finances are just a part of our business finances and interchangeable too.
They all mash together.
They do.
Laura, you have got a lovely offer for everyone to have a chat with you.
Absolutely. So here's some contact. We've got Profit First professionals in Australia, and I have a group of Profit First professionals who are willing to give free 15 minutes of their time to answer your questions. No obligation. To get, a bit of clarity of how it would work in your business. And yeah, I definitely take it up, because this does not come along very often.
So take it, guys. This is a deal that has been offered for our BBB community. The link will be in the replay. I will come and pop it into both the live streams and watch areas as well. We are still open for you to ask questions of Lauren. Now, if you've got any, sorry, Laura, why are we going Lauren? I don't know why I'm going Lauren. Don't know how long we know each other. That's a good one.
All good. I will stop sharing my screen so that we can have a face-to-face.
I'm going to give you guys a bit of an update about what's happening. If you've got questions for Laura, couple of them in here. This is our business Bible when it comes to it. I think Laura's seen a couple of copies of these by now. We're in our third year with the Business Life Planner. The 2021 just went on pre-sale today. The bonus on the 2020 version of the Business Life Planner is if you happen to grab yourself one of those, you actually get a coaching call with Clive and I. Joshua, go ahead and ask your question. I'm just going to keep people up to date with the webinar, so please pop them through. Our next couple of skills webinars for the next couple of weeks are... Oh, God, it's me next. Yeah, I know when I'm on. That's okay. I'm looking at my calendar week from week. Can anyone tell at the moment? So our next webinar is me. So next week we are literally going to be playing with, and they're not on my desk, the 5-minute marketing ideas card. So I'm going to, and for those of you who've actually seen me in action with these, we're going to take them randomly. It's going to be a 5-minute marketing ideas card. We're going to cover how you can use 5-minute marketing within your business, but we're going to explore each card, pull a card, come up with an activity, register live for that webinar, because if you're there live, because I won't be able to watch live screens and multiple screens when I'm running it myself, register for that webinar. Make sure that you head to the business.com.au/skills page and register for that webinar. And if you're there live and I happen to know about your business, and I'm going to ask you a question about what's your business, and that card and that marketing action will be for your business. So if you want to participate, it's a really good one to get involved in.
I've seen this in action in real life at Artful. And it was so good to see, the things that we take for granted or don't actually consider, to be a marketing thing. This 5-minute marketing is awesome. So don't miss it, people.
And the other thing, guys, is if you're in Melbourne, we've got a face-to-face day on October 25th. So that's a face-to-face working day. Come along, we can have so much fun. Face-to-face 5-minute marketing where we actually explore it, but I teach you the techniques about actually putting it as part of your day. So the cards are one thing, the actual technique and the mindset, just like Profit First, is all about accountability and actually doing. Our next skills webinar is on the 1st of October, then with Clive, and he's talking about the fear of sales and how it isn't a scary process. And it shouldn't have to be. So Clive's actually going to run you through the sales process and about how it's not so scary when it comes to the world of business. And then the next one on the 22nd of October is one of my favorite things because, you know, I like my systems. We've got Shalunka, who's a BBB member, coming to join us and talk about the benefits of using a CRM and customer relationship management in your business. So just like profit, just like marketing, CRMs open up a whole world of amazingness in business organization and knowing where your business is. So they are three really, really big ones to get involved with coming up over the October. So make sure, and myself next week. So jump in and get those ones. And then workshop wise, we've got the 5-minute marketing workshop in Melbourne, where we literally will be working on your marketing for those couple of days. Our course creation kickstart is booked in for November 29th to the 31st, which is 3 days working with me on your courses. And Clive's doing a workshop actually on the 26th of October on how to identify your ideal client so that you're not wasting time with those clients that drive you crazy.
Nice.
Because we've all been there and done that and still do it on a regular basis. Okay, Joshua's question, beautiful, I've got it here. Related to profit, what is the best way to work out a markup on the stock you buy? Ooh.
Okay, what industry are you in?
He was locksmith.
Locksmith, okay. Well, I guess it does. And have you done any sort of pricing analysis in your area as well? And again, I'm not saying copy, and I'm not saying that that's the right thing, but it's good to get an idea as to where you sort of stand, because that will then change what I have to say.
So, yeah, Joshua, just give you a few seconds to jump in and give us an idea of where you are with that, because we are that little bit behind on that live replay there. Joshua might need just a little bit, because he's in hospital at the moment, so he can't do a phone call with one of your people at the moment, but I'm sure we can.
We can hook you up when you're out. That's no issue.
Hook you up when you're out. We're reaching people, and isn't this funny about the a lot of technology of how we reach people on a regular basis now as well. Okay, so we're just waiting on that question coming back so that I can give that to you.
As a general answer, though, I will just answer it.
Hang on 2 seconds. I've got the answer. Yes, I've worked out an average of other companies, and it's up to 75% on top.
Yeah. Okay, perfect. So what I would actually do is, rather than looking at the profit margin itself in isolation, I'd look at what are your operating expenses, what is your wage, what tax are you going to be paying, because then that percentage on top has to really pay those bottom line percentages that we're looking at. So on average, I find that 50% is generally where it's at, and then anything above that is excess for the business.
Excess, yeah.
But you really do need to look at all of what you need to run the business in order to get the right profit margin, not just what is the markup on products and that sort of thing.
Yeah, there's a lot of strategy behind that. That's where I let Clive. That's where I let Clive and you guys do your stuff. And I go, when you know what your margins are, come with me. I'll help you market it.
But yeah, that's definitely something that you can ask. In particular, if you have some more information.
Yeah, absolutely.
Absolutely can get some answers there.
Okay.
But I hope that helps.
Beautiful. And I've just popped in, guys, for those of you who might be looking at getting the Business Life Planner. Jump in and grab that one. And I think I did say that you both you actually get a coaching call with Clive and I for every pre-ordered planner.
Nice.
$790 in value. Yeah, that'll be going in an email explanation before I hit the accounts. Beautiful. Joshua, I'm going to suggest that you even reach out. I'll tag Laura in that post in the watch stream replay, and even reach out via Messenger, because I know you can't have a conversation right now, and this is stuff about your business. I'm hoping that we can get that all done. So for those of you who have just joined us, watch the replay. It will be you'll be able to watch the live stream replay very shortly. There's a few people joining us now. I have had the most amazing opportunity to have Laura here with us today.
Thanks for having me.
That I've seen change businesses, and I've seen people's worlds change as well. Now, Laura, we spoke about this briefly at the start, because I know we've had people watching us today and who watch the replay as well. If they think Profit First is something that they want to explore as part of their business as well, because I did point out a couple of people I thought they might fit with. Can they do that? Can they chat to you about that as well?
Absolutely. So if you are an accountant, bookkeeper, or a coach that's looking to add, a more advisory stream to your business, then definitely head to, and I'll put the link in, and I'll send it as well via email to Linda. There's a B1 page on the profitfirstaustralia.com.au page, and it just fill in a little bit of information. You'll then get sent out sort of like an information pack as to what it looks like, how it can help your business, and then if that's of interest, you can book in a call with me and we can discuss further how that looks in your business, if it's a fit, and what it can potentially look like. So, and for those business owners that need help with a Profit First professional, again, hop back on the website, profitfirstaustralia.com.au, and find one is the page.
Yes, find one.
And again, information about your business. We then pair you. So it's not an auto system. We look at what you need, and, you know, and we fit you with the best, you know, Profit First professional for your needs. Generally, each Profit First professional will offer some, you know, time to understand a little bit further what you need, and then from there, you can decide how you go from there. Yeah.
Beautiful. Okay. I will chat to you very shortly. Awesome. Again, I'll hopefully see you around. Guys, thanks for joining us. Head to the skills page and register for our next upcoming webinars. And Laura, once again, thank you for joining us again today.
Thanks for having me.
To see you. Okay, see you later. Bye.
Bye.